Breaking news this Sunday. If you are a senior, a retiree, or someone who depends on Social Security, whether that is retirement benefits, SSI, or SSDI, you need to stop what you are doing right now and watch this video until the very end. Because something significant has changed. Not next week, not next month. Today, a new SSA rule is officially in effect, and it is going to affect how much money you receive, how you can earn extra income, what happens to your Medicare premiums, and how much of your benefit check you actually keep in your pocket. Millions of Americans woke up this Sunday not knowing about these changes. And here is the painful truth. Not knowing could cost you money. Real money. Money you have already earned. Money you deserve. You paid into this system your whole life. You worked hard, you played by the rules, and now the rules have changed, again. That is why you cannot afford to miss this update. So whether you are 62 and just starting to think about benefits, 67 and already collecting your monthly check, or somewhere in between, this video is for you. Stay right here. We are going to walk through every single change, explain what it means for your life, and tell you exactly what you need to do right now. Do not click away. Do not skip ahead. Every part of this video matters. Welcome back, everyone. And if this is your first time here, welcome. You are in the right place. This channel exists for one reason and one reason only, to protect you. To make sure that you are never caught off guard by changes to Social Security, SSI, or SSDI. To make sure that nobody takes advantage of your confusion. And to make sure that the money you have worked your entire life to earn keeps coming to you, reliably, correctly, and on time. Every week, we break down the latest updates from the Social Security Administration in plain, simple English. No confusing jargon. No political spin, no fluff, just the facts you need, explained in a way that makes sense. We know that for millions of you, your Social Security check is not just extra pocket money. It is your rent. It is your groceries. It is your medication. It is everything. And when the SSA makes changes, even small ones, it can feel overwhelming and scary. That is why we are here. That is why this Sunday update matters so much. Before we dive in, I want to ask you something simple. If you have not already subscribed to this channel, please hit that subscribe button right now and turn on your notifications, because updates like today's happen all the time, and we never want you to miss one. Subscribing takes 2 seconds, and it could save you hundreds, maybe thousands of dollars in benefits you did not even know you were losing. Hit that subscribe button. We will be right here every time something important changes. Now, let's talk about what happened today. So what exactly changed today? And why are we calling this breaking Sunday news? Here is the answer. Several major SSA rules that were announced last year are now fully in effect as of 2026. And while some of these changes were put into motion in January, millions of recipients are still waking up unaware of how these rules apply to their specific situation. The SSA does not call you. They do not text you. They mail you a notice. And we all know those notices can be confusing, easy to miss, or simply ignored because the language is so difficult to understand. Today, we are going to change that. We are going to make sure you understand exactly what is happening, why it matters, and what you need to do. Let's go through every major change one by one. Let's start with the good news. And yes, there is good news here. As of January 2026, Social Security benefits received a cost of living adjustment, known as a COLA, of 2.8%. This is slightly higher than last year's 2.5% increase. And according to the Social Security Administration, this translates to roughly $56 more per month for the average retiree. That means if you were receiving around $2,015 a month at the end of 2025, your new monthly payment should be somewhere around $2,071. For married couples who both receive benefits, the average combined monthly increase is around $88 more, bringing the average household total to about $3,208 per month. Now, I know what some of you are thinking. $56 a month? That barely covers 1 week of groceries. And you are right to feel that way. In fact, a recent survey found that 77% of older adults said a 3% COLA would not be enough to keep up with rising prices. Between the cost of housing, food, medication, and everyday living expenses, the COLA increase often feels like a drop in the bucket. But here is the important thing to understand. That 2.8% COLA applies not just to retirement benefits. It applies to SSDI, Social Security Disability Insurance. It applies to survivor benefits, and it applies to SSI, Supplemental Security Income. SSI recipients, specifically, got their first COLA-boosted payment on December 31st, 2025. So if you receive any form of Social Security benefit, your payment should already reflect this increase. What you need to do: log into your My Social Security account at SSA.gov and verify your new benefit amount. If your check does not reflect the 2.8% increase, contact the SSA right away at 1-800-772-1213. Do not wait. Do not assume it will correct itself. Now here is where things get a little harder to hear, and this is exactly the kind of thing that our channel exists to warn you about. While your Social Security benefit went up by 2.8%, your Medicare Part B premium also went up. In 2026, the standard monthly Part B premium rose by $17.90, bringing it to $202.90 per month, up from $185 in 2025. That is an increase of roughly 11.6% in your Medicare premium. And here is what that means for you in practice. If you receive both Social Security and Medicare, which most retirees do, the SSA automatically deducts your Part B premium from your monthly benefit check. So that $56 raise you received from the COLA? After the Medicare increase, the real net gain for the average senior is closer to $38 per month. Let me say that again. Your benefit went up about $56. Your Medicare premium went up about $18. So your actual take-home increase is closer to $38 a month before any other deductions. For millions of seniors, this is a really important reality to understand. You may have expected a bigger bump in your check. You may have made plans based on the 2.8% number. But after Medicare, the real-world impact is smaller. Let me give you a real-world scenario so this is crystal clear. Imagine you are 70 years old. Your name is Margaret. You live alone in a small apartment in Ohio. You rely on your Social Security check for nearly everything: your rent, your utilities, your prescriptions, and your groceries. In 2025, you were receiving $1,950 a month. You figured that with the new COLA, your check would go up by about $55, bringing you to around $2,005. What Margaret did not realize is that her Medicare Part B premium also went up by nearly $18. So instead of $2,005, her actual deposit was closer to $1,287. That is only a $37 improvement from the year before. And with grocery prices and rent still climbing, $37 barely makes a dent. Margaret is not alone. This is the reality for tens of millions of Americans this year. What you need to do: open your COLA notice from the SSA, the one mailed in December. It shows both your new gross benefit amount and your new net amount after Medicare deductions. Make sure you are budgeting based on the net number, not the gross. Here is a change that affects anyone who was born in 1960 or later, and this is a big one. As of 2026, the full retirement age, or FRA, is now officially 67 for people born in 1960 or after. This is the final step in a gradual shift that began all the way back in the 1980s. For decades, the retirement age was slowly moving from 65 to 67. And now, as of this year, that transition is complete. What does this mean in practical terms? It means that if you turn 62 this year, meaning you were born in 1964, you are now looking at a 5-year wait until you can claim your full, unreduced Social Security retirement benefit. Now, you can still file for benefits at age 62. Nobody is stopping you. But if you claim before your full retirement age of 67, your monthly benefit will be permanently reduced by as much as 30%. Let me repeat that. 30%. Permanently. For life. And here is the flip side. If you wait past age 67 to claim your benefits, your monthly check grows by 8% for every year you delay, all the way up until age 70. That means someone who waits until 70 instead of claiming at 67 could receive up to 24% more every single month for the rest of their life. Let me put that in real numbers. Say your full retirement benefit at 67 would be $2,000 a month. If you claim at 62, you might only receive around $2,400 a month. But if you wait until 70, you could be collecting $2,480 a month. Over a 20-year retirement, that difference adds up to more than $256,000. Now, of course, not everyone can wait. Some people need the money now. Some people have health conditions that make waiting risky. We understand that completely. But if you have flexibility, understanding this rule is critical. What you need to do: know your full retirement age. If you were born in 1960 or later, your FRA is 67. Use the SSA's retirement estimator tool at SSA.gov to see what your benefit looks like at different claiming ages. Then make the decision that is right for your personal situation. Now let's talk about something that is actually very good news for a lot of you, especially those of you who are still working or who are thinking about going back to work to supplement your Social Security income. In 2026, the earnings limits for people who collect Social Security while still working have been raised. Here is how this works. If you have not yet reached your full retirement age and you are collecting Social Security while working, there is a limit to how much you can earn before the SSA starts temporarily reducing your benefit. In 2025, that limit was around $23,400 per year. In 2026, that limit has increased to $24,480 per year. That means for every $2 you earn above $24,480, the SSA will hold back $1 in benefits. It is not a permanent loss. When you reach full retirement age, the SSA recalculates your benefit and gives you credit for those withheld months. But in the short term, it means less money coming in. For people who are in the year they reach their full retirement age, the limit is much higher. $65,000 turns $60 in 2026, and the penalty is less steep too. Only $1 held back for every $3 earned above the limit. And once you actually reach your full retirement age, the earnings limit disappears completely. You can work as much as you want, earn as much as you want, and your Social Security benefit will not be reduced by a single penny. Let me give you a real-world example here too. Imagine you are 64 years old. Your name is Robert. You retired early but realized your Social Security check alone was not quite enough to cover everything. So you picked up a part-time job at a hardware store, earning about $28,000 a year. Under the 2026 rules, Robert earns $3,520 above the $24,480 limit. That means the SSA would temporarily hold back about $1,760 in benefits for the year. But here's the key. When Robert turns 67 and reaches his FRA, those withheld benefits will be credited back, and his monthly payment will be adjusted upward to account for them. So if you are in a similar situation to Robert, know that working is not necessarily a bad idea. But you need to report your earnings to the SSA and make sure they have an accurate estimate of what you expect to earn each year. If you underreport and get overpaid, you may have to pay that money back later. And nobody wants that. What you need to do. If you are working and collecting Social Security before your full retirement age, report your expected earnings to the SSA every year. Use the online earnings estimator at SSA.gov to see how your income could affect your benefit. And remember, once you hit 67, those restrictions go away entirely. Now let's talk about something that may be the most overlooked change of 2026, and one that could put real money back in your pocket, but only if you know about it. Thanks to new legislation signed into law in 2025, seniors may now be eligible for a brand new $6,000 federal tax deduction specifically designed to help offset taxes on Social Security income. Here is some background. Up to 85% of your Social Security benefits can be taxed at the federal level, depending on your total income. This has been a painful reality for millions of retirees who thought their Social Security would be tax-free, only to discover that the IRS treats a portion of it as taxable income. The new senior deduction is designed to help ease that burden. If your modified adjusted gross income is $75,000 or less as a single filer, you may qualify for the full $6,000 deduction. Married couples filing jointly may qualify as well, depending on their combined income. This deduction is on top of the standard deduction, which also increased for 2025 tax year filing. For single filers, the standard deduction rose to $15,750. For married couples filing jointly, it increased to $31,500. These are significant numbers. When you combine the standard deduction with the new senior deduction, some retirees may find that their taxable income is significantly reduced, or even zero. Now, this is not something the SSA handles. This is a federal income tax issue, so it does not change your monthly benefit check directly. But when it comes to the money you keep at the end of the year, it can make a very meaningful difference. Importantly, the SSA 1099 forms, the forms that show how much Social Security benefit you received in 2025, which you need for your tax return, were mailed out starting December 26, 2025, and are also available online through your My Social Security account starting December 25. What you need to do: collect your SSA 1099 form, then consult a qualified tax professional, ideally a CPA or a personal financial specialist, to find out if you qualify for the new $6,000 senior deduction and how to best take advantage of the higher standard deductions. This is not the year to skip professional tax advice. The rules changed significantly in 2025, and the savings could be substantial. We also want to make sure our SSDI recipients, those receiving Social Security disability insurance, understand the changes that apply specifically to them. First, the good news: the 2.8% COLA applies to SSDI payments as well. So if you receive disability benefits, your monthly payment should have increased starting January 2026. Second, there are updated rules around what the SSA calls substantial gainful activity, or SGA. This is the income threshold that determines whether someone on disability is earning too much to continue receiving benefits. In 2026, that threshold increased to $1,790 per month for most SSDI beneficiaries, up from $1,220 in 2025. For those receiving SSDI due to blindness, the threshold is even higher, $2,130 per month in 2026. This is a modest increase, but it is meaningful. If you receive SSDI and have been considering some part-time or occasional work, knowing this limit helps you plan carefully without accidentally jeopardizing your benefits. What you need to do: if you receive SSDI and are thinking about any kind of work activity, contact the SSA first to understand how your earnings might affect your benefits. The rules around SSDI and work are complex, and even small mistakes can create problems that are very hard to undo. All right. We have covered a lot of ground today, and I know that can feel overwhelming. So before we wrap up, I want to take a moment and just speak to you directly. If you take nothing else from this video, take this: the Social Security system is not simple, and it is not standing still. Every year, rules change, thresholds move, premiums go up, tax laws shift, and the SSA does not always do a great job of explaining what those changes mean for regular people in plain, everyday language. That is why your awareness, your willingness to stay informed, is the single most powerful tool you have. Here is a short list of things I want every one of you to do in the next 48 hours. Log into your My Social Security account at SSA.gov. Verify that your new benefit amount reflects the 2.8% COLA increase. Make sure there are no errors, no missing payments, and no unexpected deductions that you cannot explain. If you receive Medicare, look at your net benefit amount, not your gross. Account for the higher Part B premium and build your monthly budget around the actual amount that lands in your bank account. If you are still working and collecting benefits, double-check the 2026 earnings limits. Report your expected earnings to the SSA accurately. Overpayments are a nightmare to deal with later. If you were born in 1960 or later and you have not yet claimed Social Security, understand that your full retirement age is now 67. Use the SSA's retirement estimator to explore your options before making any decisions. Get your SSA 1099 form and talk to a tax professional about the new $6,000 senior deduction. Do not leave money on the table just because you did not know to ask. If you receive SSDI, know your new substantial gainful activity limit, $1,690 per month, and contact the SSA before engaging in any kind of paid work. And finally, one more thing I want to say. Do not be afraid to ask for help. The SSA has a helpline at 1-800-772-2113. They can answer questions, help you understand your benefit statement, and connect you with local Social Security offices if you need in-person assistance. You have earned these benefits. You deserve to receive every single dollar that is owed to you. Do not let confusion or fear or simply not knowing the rules stand between you and what is rightfully yours. Before I wrap up, I want to take just a moment and remind you why this channel exists. We started this channel because we saw too many seniors, too many retirees, too many people on disability being blindsided by changes they had no idea were coming. People who lost benefits because they did not report earnings correctly. People who claimed too early because nobody told them about the full retirement age. People who missed out on tax savings because no one explained the new rules in plain English. We are tired of that happening, and we believe you are too. So, if this video helped you, if it gave you even one piece of information that you did not have before, then please do 3 things for us right now. Hit that subscribe button right now if you have not already. It is free. It takes 2 seconds. And it means you will never miss an update that could protect your income. Hit the like button on this video. It tells YouTube that this information is valuable, and it helps us reach more seniors and retirees who need to see it. Share this video with someone you love. A parent, a neighbor, a friend. Someone who depends on Social Security and might not know about these changes. Forward it. Text it. Share it on Facebook. You could be doing them one of the biggest favors of the year. Because here is the truth. The more people who are informed, the fewer people who get caught off guard. And that is something worth fighting for. This channel is your channel. We are your advocates. We are your resource. And we are not going anywhere. Let's do a quick recap before we go. Today, we covered 6 major Social Security changes that are now officially in effect for 2026. Your benefits increased by 2.8% thanks to the COLA. But your Medicare Part B premium also went up by nearly $18 a month, reducing the real net gain to about $38 for the average recipient. The full retirement age is now officially 67 for anyone born in 1960 or later. Claiming before 67 reduces your benefit permanently. Waiting past 67 increases it by 8% per year up to age 70. The earnings limits for working retirees increased. If you are under full retirement age and working, you can now earn up to $24,480 before seeing any benefit reduction. A new $6,000 federal tax deduction for qualifying seniors may significantly reduce your tax burden on Social Security income. Talk to a tax professional. SSDI recipients saw their benefits increase with the COLA, and the substantial gainful activity threshold rose to $1,690 per month. The SSA 1099 forms for 2025 tax year benefits are now available, online and by mail. You will need this form for your tax return. These changes matter. They affect your budget, your planning, and your peace of mind. And now you know about them. That alone puts you ahead of millions of Americans who are still in the dark. We are going to keep doing this work every week, every Sunday. Every time the SSA makes a move, we are going to be right here, explaining it, breaking it down, and making sure you are never left confused or caught off guard. You have worked too hard. You have waited too long. You deserve your benefits, fully, correctly, and on time. Until next time, take care of yourself. Take care of each other. And remember, we are always here for you.